Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean to say we actively cover positions in gold, silver, platinum, palladium, oil spreads, natural gas, base metals, agriculture commodities, equities, and foreign exchange. Probably, God willing, we would be very soon covering our positions in DLC, daily leverage certificate, and factor certificates. DLCs are from Singapore, while factor certificates are from European Union. Many countries in the European Union have provisions for factor certificates. Guys, we really need to understand that we are a proprietary hedge fund. Many people are writing to me and saying that we wanted to invest in your fund. Rather, few people have brought to me that we wanted to take a position in your fund, which means they wanted to buy a stake in our fund. But we are very clear from day one that we would continue to be proprietary, which means no third party, I repeat, no third party can invest capital in our fund. Please take a note of that. Guys, we all understand that the aviation sector in India is in big trouble. But we should also be thank you to our media, to our magazines, to our newspapers, and to our business channels for not highlighting the same. In India, we have three listed aviation companies. Number one is the Indigo. Number two is the SpiceJet. Number three is the Jet Airways. Although, as far as the Jet Airways is concerned, we have to agree that their operations are not yet started. And unfortunately, before starting up of operations, there are many news about the Jet Airways which are coming up in the public domain. If you open the Google, you check yourself. Because today, I'm not covering Jet Airways. I'm covering two big airlines. Number one is the Indigo. Number two is the SpiceJet. We all are aware that Air India is having huge debt. Alongside Air India is in huge losses. Tata Group, which is already having a huge debt. Tata Group, who already owns around 300,000 crores, which is around 3 trillion, near about 3 trillion worth of debt in their books. They are reaching towards 3 trillion mark. And irrespective of that, the Tata Group is investing in Air India, Tata Group investing in e-commerce, and many loss-making startups. This is something a very big concern for me. Unfortunately, Tata Sons, who is the main principal entity of the Tata Group, it is not a public entity. Henceforth, the holistic information about the Tata Group is always a difficult job, and time constraint is always there. Indigo, in the last several years, specifically effective 2020, I would say the position of Indigo is in big trouble. Indigo debt has grew to a tremendous level, I would say. Indigo investments is okay. The finance cost is going up on the higher side, common sense, because if your debt is moving up, so would be your finance cost. And Indigo reserves, which is I would say, the backbone of any company, because reserves is the backbone of any company. There is no company in this universe who can ignore the fact that the reserves are not the backbone of the company. Unfortunately, Indigo reserves are going negative. It's a common sense. It's an accounting principle, because if on year-on-year basis, if on Y-on-Y basis, you are incurring losses, it would add up in your negative retained earnings. It's a common sense. Now, when it would add up in your negative retained earnings, in this eventuality, it would add up to your reserves, because retained earnings, whether it is positive, whether it is negative, it's a part of your equity. It's a common sense. And if you are building your negative reserves on a period of time, example Paytm, Zomato, Policy Bazaar, and many such companies, then technically speaking, your equities are moving. Your equity means not the stock. Your equity is going negative, which in a very strict accounting parlance, I repeat, strict accounting parlance, is known as negative retained earnings. But when you look at the share price of Indigo, when you look at the movement of the share price of Indigo, you will not be able to digest the fact that the share price represent an aviation company whose debt is going up, whose negative reserves are going up, and on Y-on-Y basis, rather quarter-on-quarter basis, this company is incurring losses. Without going further, we also need to appreciate one fact, that the global economic backdrop is very poor. Very poor as we speak. We know Amazon, we know Cisco, we know Apple, we know Facebook, we know Microsoft, we know Google, and today one more joined, Cisco. The list is very long. And remember that in the times of depression, the aviation sector is the first hit, because the business travel, the luxury travel, it would all stop. And considering the war which is going in Ukraine, considering the fact that North Korea is firing ballistic missile one after another every week, considering the fact that Russia doing the nuclear drilling, considering the fact that United States may enter a war with China if China invade Taiwan, henceforth the outlook of aviation sector is not very rosy. That is the reason from 2021 end, that is rather in 2021 itself, I was very clear that I am not going to be taking any exposure in the aviation sector, because I do not see the rosy outlook of the aviation sector. The rest I would be covering in the second part. We specifically talking about an issue covering the SpiceJet. I have already covered a podcast on my YouTube channel where I spoke about the debt, I spoke about the negative retained earnings, and I spoke about the finance cost and also the losses of the SpiceJet. In March, I would like to say that the debt of SpiceJet and everything is going up. I would say that what I should say that there was a time when SpiceJet debt was very less. If you compared with today's debt, you would yourself get to know. Share price used to be 83 around, and check today where it is. And just check with the investors who bought SpiceJet. And I warned people, effective 2021, that the airline sector is not conducive in nature. Do take a note of that. This is a document which I printed from the Money Control, a website most of the people are aware about. In this Money Control, they have mentioned about the losses which SpiceJet made. I have already made a podcast in that regard, so I won't be covering this. But one thing I would like to cover is that out of total losses, so in this quarter, which is September 2020, September quarter, which has just ended, SpiceJet reported a net loss of 838 crores. So 838 crores is the total losses which are reported by SpiceJet. Correspondingly, the 1 year ago, you would say they reported 562 crores. So 1 year ago in September 2022, September 21, they reported near about 561 and now they reported 838 crores. Like I said, I'm not covering anything about the losses in this. The foreign exchange losses out of the total is 260 crores, which means out of 837 crores, 838 crores precisely, you can say, 260 crores is the foreign exchange losses, which means approximately between 25 to 28%. Approximately 25 to 28% is the foreign exchange loss. I repeat, out of 838 crores of losses, 260 crore is due to the foreign exchange. This is as per the document which I have from Money Control. Now, it raises a big question to me because I worked in a treasury department. I worked in the front office desk of the treasury department. I knew that how the front office work. The airline industry, whether it is SpiceJet, whether it is Lufthansa, Emirates, Etihad, British Airways, probably any Singapore Airlines, Qantas, all airlines are subject to have 3 exposures, maximum 4, you can say. Number 1 is the cash flow hedge exposure. I doubt SpiceJet having a big cash flow exposure because SpiceJet predominant exposure is in India. So the cost is in Indian rupee, the pilot salary, the crew salary, their operating expenses, food and everything. And the revenue is also coming in Indian rupee, which means there is limited cash flow exposure unless otherwise SpiceJet having significant operations outside India. So this question I leave to SpiceJet. Second is the fair value hedging, which means, like I said, SpiceJet is having loans in their books, debt, borrowing, whatever you say in their book. Now this debt borrowing, some part they might be having in foreign currency, some part they might be having in Indian currency, Indian rupee. Now the functional currency of SpiceJet is Indian rupee, which means the Indian rupee debt which they are having, INR, the Indian rupee debt which they are having, this debt cannot have any fair value hedging impact. The reason being, fair value hedging means an exposure which is subject to revaluation. An exposure which is subject to revaluation. So when your functional currency is Indian rupee and when your exposure is in Indian rupee, so there is no revaluation, there is no translation, story is over. But if your functional currency is in Indian rupee and some part of the debt is in dollar, in this eventuality, you are having an exposure to foreign exchange. And this signifies the fact because SpiceJet himself is saying that out of total loss, 260 crores in losses was due to foreign exchange loss, the airline said. The airline himself agreed to this. Third is the lease agreements, which means gone are the days when the aviation companies used to buy the planes from their own pocket, then they used to operate the plane, and then they used to earn the profit out of it. As and when the plane get retired, they will sell this out, whatever scrap, whatever they are getting, and then they buy the fresh plane from the profits, basically their reserves which they have maintained. But the story has completely changed in the last 5 to 6 years, because as I speak, in November 2022, the global aviation sector is standing at a debt of approximately 650 billion US dollars. You heard me very right, 650 billion US dollars. And this debt is accumulating. This is a figure of 2021. I do not hold the fresh figures of 2022. I'm trying on internet. If I get it, I would definitely update you in that regards. Now, this is global aviation sector. You see Air India, Vistara, Air Asia, your Indigo, SpiceJet, Jet Airways. They all have debt in their books. Some have huge debt, some have low debt. Now the question is, the very big question, which is that the lease agreements which these aviation companies signed with their counterparties. Unfortunately, aviation sector is an area. I repeat, unfortunately, aviation sector is an area whereby limited text is written as far as the lease agreements are concerned. But that does not mean that there is no exposure of the lease agreements, and that does not mean that there is no counterparty risk in the lease agreements. Because it is less, it doesn't mean there is no counterparty exposure. There is a counterparty exposure. There is issues of the lease agreement. Guys, do remember that the 260 crores of foreign exchange losses, I repeat, 260 crores of foreign exchange losses, which SpiceJet is talking about, this raising many concerns for me. Probably it might not be raising any concern for many people, but it do raise many concern as far as the hedging program of SpiceJet is concerned. The reason being, in today volatile times, I repeat, in today volatile times, if the hedging program of any organization, whether you are airline, you are manufacturing, you are telecommunication company, you are FMCG company, or anyone, if your hedging program is ineffective, if your hedging program is unable to handle the volatility in the market, in this eventuality, the losses would be severe. And if you are expecting that if you are expecting that the volatility is done, if you are expecting that the volatility is over, then please wait, 2023 is coming. Henceforth, guys, now, like I said, Treasury Consulting Aviation Desk is initiated. Now we would be reviewing the balance sheets, the annual report of the top airlines like Lufthansa, Emirates, and all these top airlines. We'll keep you posted about the major updates, but this statement which I studied, because I believe in research, I believe in so many things, this statement which I studied, and because of this statement, they end up being a loss of 260 crores. This is something a really concern for me. A real concern for me. Anyways, guys, this is Rahul Magan here from Treasury Consulting Group. You knew my personal number, +91 9899242978. In case you wish to have any information, you can visit our fixed income platform www.fixedincome.global. I repeat, www.fixedincome.global. Have a great time ahead.